Thank you for joining me. I'm Alex, and I want to talk about Chipotle today. So, Chipotle does Mexican food, basically, and they, for one, have a ridiculous valuation, and for another, they had some food scandals in the past, not recently, though. And Jim Cramer actually said that they're well equipped to handle the current situation because they had the issues that they did, and then they fixed it, and then they kind of did the things that now everyone has to do, and so they were well equipped to handle what's happening right now. So current price is $1,147, which gives them a market cap of $32 billion. Dividend is zero, and I don't expect that to change, and I don't really think that they can afford that either way. Currently, I think they would be far better off just putting some money back and kind of trying to ride out anything that happens. Revenue $3.6 billion, which is down significantly. Earnings $350 million, which is up almost 100%, which gives them PE of 127 with a forward PE of 114. So obviously you can see the ridiculous valuation right there. Obviously a company with negative revenue growth really shouldn't have a PE over 20, let alone 120, but here we are, I guess. Current assets $5.2 billion, total liabilities $3.4 billion, which gives them a total stockholders' equity of $1.7 billion, which is up just about as much as the earnings were, which is reasonably obvious if they're not doing anything else with it. So they're doing what I think they should, and that is a good thing. The balance sheet actually doesn't look terrible. I would have preferred the $2.3 billion in assets and $800 million in liabilities because the ratio was far better than what they have now. But obviously an increase in stockholders' equity is never a bad thing. So obviously for a growth investor, this is definitely not the stock for you, and for a growth investor, pretty much any stock with a PE over 100 is kind of what you look for, I guess. The problem is that there is no growth, so the valuation is just not justified at all. For a dividend investor, obviously there's no dividend, so this is not going to be for you either. For a value investor, pretty much everything looks pretty decent. The problem is that the valuation is just ridiculous, and there's no dividend. And for the valuation to make sense, they would have to double their earnings about 3 times. So go to 700 million, 1.4 billion, $2.8 billion, which, as you can tell, is fairly close to their revenue. So this valuation doesn't make any sense. And for a value investor, there's far better companies out there, or companies with far better valuations, far better balance sheets, and even dividends. So I really don't recommend anyone buy this stock right now, not because it's a bad stock, but because there's far better opportunities out there. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.